This is Mark Anthony with Mercury Time Price Analytics with our end of day algorithmic ES and NQ trading video for Tuesday, December 31st, 2019, as if I'd forgotten it was New Year's Eve, as there's fireworks going on outside. By the way, it was brought to our attention that the last couple daily update videos had no sound. And thank you for the kind person who brought that to attention. And also thank you so much to the person who liked those videos that had no sound. Thank you, Mom. I'll see you soon. All right, so I've got the chart pulled back a little bit so we can see Friday, Monday, Tuesday, a little bit of Thursday. And I wanted to pull this chart back to show you how easy it is to interpret the signals with our algorithm. These are very sophisticated time price algorithms, and the reason they're so accurate is because the weighting is heavily based on time and not price. And so that's why a lot of times you see these jagged ups and downs in price and you get whipsawed in and out, when it just takes the proper time for that trade to cook in terms of the way time works and the way algos are programmed around different time cycles. And so when we designed this system, it's incredibly powerful, but we knew that it had to be easy to use. So what you see on your screen looks like some moving averages, and they're anything but. That's just the visual representation of the algorithm. So this cyan line that you see sloping up and down and a little bit up and down, that's our proprietary momentum indicator. We just represent it on a chart as something folks are used to, like something that slopes up and down like a moving average. So the cyan line is our proprietary momentum indicator. These white dashed lines are our proprietary volatility indicator. And for every bar, there's two dashes. So very simply, when those dashes get closer and closer together, volatility is contracting. As they expand, volatility is expanding. Now, the reason we did that is this. In order to have the maximum probability of being correct in a trade, you need two things. You need to be right on the direction of momentum, and you need to be right on volatility. And what I mean by that is the best entries are when you get into a trade under an environment where volatility is low, and then have volatility expand in the direction that you want that trade to go. Obviously, higher if you're long and lower if you're short. So we'll zoom this out in a minute, but for every one of these price bars, there's two white volatility dashes. And as they get closer together, well, you guessed it, volatility is contracting. And as price spikes up, volatility is expanding. So notice right here, as price is just about to ramp to the upside, you have the maximum compression of volatility. And literally, we built this system with institution level algorithms, but designed for individual traders, because to me, there is no reason why day traders, folks that are trading their own accounts, trying to make money for themselves and their family, shouldn't have the same level of sophisticated tools the institutions have. There's not too many companies that do this kind of work that cater to the individual. Well, we've leveled the playing field. As evidence of that, you take the day after Christmas on Thursday, the 26th. Our algo was long from bell to bell. On Friday, our algo was short from bell to bell. On Monday, it was short from bell to bell. And on Tuesday, the 31st of December, you see the adaptability. Short off the open, and then gets long at 30.19 and rides this ridiculous move up into the close. So the way our triggering mechanism works, it's really simple. There's two parts to it. The cyan line, which is the momentum indicator, needs to transition from down to up to down, or from sideways to directional. So once you see that change in direction, then you know that momentum is moving in that direction. Now, the trigger occurs when the little white volatility dashes, for example, for long, they cross from under to over. So there's your two components. You have right here, you have an example of momentum, the cyan line going sideways, consolidating. The cyan line will always move first, and then at the point where the little white dashes cross from under, up and through, that is your long signal. Opposite up here. So we have the apex of our momentum indicator up here at the all-time high, and it rolls over. And by the way, anytime you see a little V, I call it a kink, in this momentum indicator, you're going to get a big move. Let me requantify that. Not necessarily a big move in terms of handles. You'll get a fast move when you see these little kinks, and top or bottom. You see a kink at the bottom, same thing. And the way the system is designed, I used the word before that in terms of time, the trade setup has to cook properly before you're going to get in. So what you always see with our triggering mechanism is the momentum indicator will turn first, and then the white dashes, the volatility indicator, will turn second. And at the point that the white dashes cross down through, in this case, down through the momentum line, well, that's your short entry. Okay, so let's zoom this in, and let's do this because I want to talk about NQ. NQ did something very interesting at the end of the day. If you watch these videos, you'll start picking up little clues about how the algos do these little head fakes. I call them hooks. And the more you see them, the more you'll be prepared for them, and the less you'll be fooled by them. See, again, leveling the playing field, gang. What we had today is we had just before the open, we had this moved, and actually not just before the open, it was around 6:30 Eastern time. Price hit this peak around 32.28 and just went down, down, down till right at the open, and boom, it went up. Now, these systems run continuously. As long as the market's open, our systems run. Our subscribers have access to this via a live chart on Zoom. So if you're on the West Coast and you want to be trading late into the evening, or let's say you are a shift worker and you want to trade in the middle of the night, I mean, there's movement. There's movement. One thing I would recommend is that after about 10:30 Eastern time, you really don't want to be short, because you get into the Asian market lunch session, and that market will drift higher. But if you're in a short, this is just a general rule, if you're in a short and it's not working in Globex by 10:30 at the latest Eastern time, it's most likely not going to work. So we had this move down, and then the market opens and we get this blast up. And I'm going to switch over to the other chart, because you can see here what traders love about our system is that it combines the algorithm that gets you into the trade and out of the trade, and long to short or vice versa, with these horizontal lines, which are proprietary. We call them profit capture zones. But what they are is they're proprietary mathematical algorithms. We never draw support and resistance lines on charts, ever, period, end of story, because that's not what the algorithms do. Every line you see on any chart that we ever put out, that is a line that pivot level is generated mathematically through our proprietary time price analytics. Now, we get asked all the time, are these, how are you getting these support? They're not support and resistance zones. These are algorithmic pivots. When you overlay it on a chart, it looks like support and resistance zones, because you couldn't draw them in there any better with a ruler. But everything on here is mathematical. I mean, it is amazing how precise these algos are. So let's zoom back in. And what these pivots do is, when you're in a trade, you don't have to guess at what points it's appropriate to take profits. One of the things I love everything about trading except one thing. It would drive me nuts when I would be in a trade and it was working, and instead of enjoying that trade, I'm sitting there obsessing every minute. Should I get in? Should I get out? Should I take profit? Should I not? And you turn a winning trade that should be enjoyable into something that's filled with stress and anxiety. So even on your good days, you end up stressed, tired at the end of it. You don't have that. And the way we built this system, we've got many, many different pivots. If we just switch over to this chart, there's a lot of space between these pivots. The other charts are closer together. Well, in our live chart on Zoom, we run both these charts side by side. And the reason we do that is because if somebody has a small account, we want them to be able to take profits at smaller incremental levels, because we don't want you to have a profit in a trade and have the institutional algos whip you right out of it. And so if you got a larger account, we've got this other set of pivots that has more space between it. It's as simple as that. But when you look at, watch these videos for a few nights, and you will be amazed at how many times ES and NQ hit these algorithmic mathematical pivots to the tick all the time. Let's go back over here again. The other thing that's really cool about our system is that we've got these things called Mercury dynamic pivots. And the word dynamic refers to the fact that any other pivot you've ever seen is simply a price level. And sometimes they'll call it upper level, lower level, things like that. Ours have specific characteristic names. So have you ever seen a pivot called a price acceleration pivot, or a tick reflex pivot, or a back test pivot? These trend baseline pivot. These pivots have names because that is the type of characteristic behavior that you'll see. Now, the one exception to that is with these price acceleration pivots, a lot of times the first time into that pivot, you'll get a bounce. And then the second time through, it'll break. The other thing is really neat, and this is one of the reasons I wish this last couple of videos actually had the sound, is because there's something we've been working on for a couple of months, and that is to come up with one algorithmic pivot level at the beginning of the day, which we release hour to hour and a half, depending upon how the time mechanics work that day. But we release that at least an hour, hour and a half before the market opens, and that is your one bull bear pivot for the day. For yesterday, Monday the 30th, it was at 32.4150. Was that a pretty good bull bear pivot? And what the bull bear pivot does, and this is what it's designed to do, it bisects these big chunks of price, and that's why it's a single bull bear pivot. So that was 32, 4150, 4250. Today it was 32.2656. That was released at 8 a.m. Eastern time. Posted it on Twitter. Mark Anthony on Twitter, MC2085, at MC2085. But we posted that this morning. Now, why was that a great bull bear pivot? Well, number one, the morning bounce hit it to a tick and reversed. But pull this chart out and look at this. Okay, so this is Monday, and this is Tuesday. And this is why it's the bull bear pivot, because that knows where the stops are, both long and short. So we go back in here, and here's what we saw happen this morning. So you get this move down before the market opens, and then you get this spike up right on the open, and it stops to the tick at our proprietary bull bear pivot. This should work like this every day because it's the same math. The math doesn't change. But it came up to that bull bear pivot to the tick, and then came back down. And there wasn't really much up and down in this. It was pretty much straight down from a little bit before 10 o'clock all the way until the lunch window, and then we had this sideways action. Now, when price came down here, so this is basically your open, you get this spike down, and where does it stop? Well, it went like a knife through butter through this price acceleration pivot. Normally you don't see these price acceleration pivots that close together. So it knifed directly through this first one, stopped at this second one, and then you got this catapult higher. Now also notice what happened. You come down here, and now here's the lunch window, and here's the early afternoon window, and you get this little symmetrical triangle. And you know what that means. You're going to get a move. Now, traditional technical analysis tells you that an ascending triangle is a continuation of a prior move, which, okay, we started up here at all-time highs. But in the age of liquidity, not so much. Now, here's why once you try this system, you will never trade without it. Okay, imagine you're trading and you got this move down incessantly from about 10 o'clock. And then in the afternoon, you get this spike up and this move down and this spike up and then this sideways. Flip a coin. Well, I don't like the probabilities if you're flipping a coin. Well, look what our oscillator did. Here's our momentum indicator. Let me pull it back a little bit. Steep move down, sideways action, a little bit of down. Now it's just persistently down until this point right here. As you get out of the lunch window, it was about 1:30, right around 1:30, that this bottomed, and then it starts turning up. Well, what the algo is doing is every bar, it's mathematically processing time and price. And so this starts to turn up, and what happens to our little white volatility dashes? They come down here, and then they pop through, and there's your long entry, 32.19, and we're off to the races into the close, which I think was a little predictable. If you were trading the last trading day of the year in 2017, we had this last 30 minutes, ES just puked like 30, 35 handles. There was no way on earth that was going to happen today. The reason that we knew this was a fake out, we talk about hooks. When you see a mathematical pivot, which is right here. In fact, let me pull this back out just a little bit more. This was a hook. There's a very long cycle pivot that was right at 31.51 Thursday evening. We put these long cycle pivots out in Globex, and they applied Globex end of the day session the next day. And there were two extremely firm levels, 32.51. Now, at any other day in Globex, price goes up to that extension pivot, and it stops on a dime. I mean, literally to the tick. Well, that's not what it did Thursday and into this was early Friday morning. You had this little loop. Remember, it's right here, 32.51, and you get this thing. This is what I call a hook. That's the algorithms setting the hook, running the stops, because that's what ES's job is to do, is to run your stops. And then you get this move down. And of course, the associated kink. As soon as we saw that kink, I mean, a couple minutes after we got this high, we knew that this was going to be a fast move. Weren't necessarily expected to move down to 30.14, but that's one of the neat things about it too. I want to show you something interesting on NQ, and we'll stay here on our TOS. As a matter of fact, just one more thing here on this bull bear pivot. With our systems, you don't guess. I mean, you can take, let's say you didn't have our oscillator on here, our entry oscillator, and it's getting towards the end of the day, it's 3 o'clock, and ES goes right back up to this bull bear pivot that stopped it to the tick in the morning. Well, let's say, for example, that price went up here, because just for a moment on this bar right here, it did stop to the tick. And if you're thinking, hey, deja vu all over again, what happens if you put a short position on right here at the bull bear line was 32.26.56, went up there and stopped to the tick. And so let's say you put a short position on at 32.25.50. Well, your stop on that short position is right on the other side of the pivot. So if you're wrong, you've risked a handle, maybe a handle and a half. And that's what risk management is about. You can be wrong more than you're right. But if on your wrong trades, you're losing a handle and a half, and on the trades that you're right, like for example, if you did that same short against this pivot this morning and went from 32.26, that's me, the trading dog, down to 32.14, well, you know, you made all those handles there and you were wrong by a handle and a half here. And it is New Year's Eve, so if Mia's barking in the background, well, forgive me for that. She's under my desk right now. So last thing I want to show you is NQ as the rocket's red glare. And let's just change our chart. In order to actually show you NQ, we need to pull up NQ. All right. So this is just a little thing that we look for, um, these algo hooks. Now, again, can you be any more precise than that? By the way, these things on our charts that say live pivot, the third piece to our system, you've got the automated algo, you've got the pivots that we put out before the market opens, as well as the pivots we put out in Globex, so if you want to trade the night session. But any good algorithmic system has to be able to adapt during the day. And anything that you see that says live pivot, those are pivots that we generate 3 times a day. And they are as rock solid accurate as anything you'll ever see. And we leave them on the chart until price trades out of the zone. So, imagine this pivot was back on December 20th. So this was at 86.91. There we go. So here you've got a move from 87.94 that comes all the way down here and stops to the tick. Now, imagine dropping a penny off the top of a building and pinpointing exactly where it's going to land. There is nobody who could have said right here when NQ is at 87.94, you know what? I bet you it goes back and stops it at 86.91. At some point it's going to, because these live pivots get retested. And again, we keep them on the chart until it trades out of the zone, and then we get rid of them. But what's interesting about NQ today is came down here, went back up, it came back down. This, to me, is what's interesting. This is what the algos do. So we had this spike up, spike down, sideways, and then everybody's thinking, oh yeah, it's just going to drift higher. They're not going to let this thing close poorly on New Year's Eve. Liquidity, blah, blah, blah. I don't care about liquidity. I just care about what the algos say. The algos said, well, here we are. We're drifting up. We'd come down here to 87.04, and now we're drifting back up 87.29, which 25 handles. If you're trading NQ, it's $20 a handle, okay? And you're thinking, it's just going to be a slow drip up. Well, what they do is they take the money of the longs and the shorts, and then the move happens. So you get this nonsense right here. So this bar high of 87.27, and if you're watching the chart, we've got a live chart for our subscribers. This was like boom. I mean, this wasn't this bar, that drop down was so fast and reacted so quickly. So what did it do? It just ran all these stops that people had placed underpriced for the last hour, hour and a half, and then you get the move up. So what do the algos do? Well, the algos do this because what they're really looking at is this. Okay? So the algos are getting ready to take this thing higher, but before they do it, they're going to do boom. And your stops run and you're out, and now you're having to scramble to get back in long. Or you're trying to short this. Maybe you had a stop order to short below here, and you got in, and you're like, yeah, and then goes the other way. Well, what did our algo do? While all this nonsense was happening, it slowly turns back up, the cyan momentum indicator. And then notice what happens, and you'll see this 90% of the time. Just before the entry is triggered, these volatility dashes, remember there's 2 for each bar, they compress, they mesh to it looks like one little hash. And then as it goes through, then it moves higher, and as price moves higher, it's that volatility that's pushing it higher. It's not, I don't want to get into it, but people think price movement comes first and then changes in volatility. No, that's not the way the institutional algos work. It's the other way around, and no one can ever convince me any differently, because we saw this happening. As price was going sideways, our vol indicator was going up, and if you're watching the VIX, you were seeing it go down this whole time. So it wasn't difficult to spot. Just to pull this chart out, I mean, you can see how accurate this is. We talked about ES a minute ago. Here's NQ. This is back here Thursday. Let me pull the chart back just a little bit more. So back here Thursday, long 87.37. you know, you get this move up to 88.43. It's long the whole way, and then it flips and you ride it down. And what you're seeing on the screen here, this is just our day trading oscillator. We've got systems that are designed to trigger more slowly that are for swing trading. And we've got an even longer system that's designed for positional trading. Our positional trading algo in NQ has been long since 8,200. 8,200 to 8,800. Our positional algo on ES has been long since 3118. Now, both of those systems flipped here. So, you know, those systems that were long for all those hundreds of handles, they triggered short on Monday. So this nonsense you saw at the end of the day, forget about it. I mean, price is going to have to prove it, because I started the video mentioning that we had something interesting happen. Wanted to show you this in context. So we had this big move down off the all-time high on Monday, and then we got this at the end of the day, and what do you get at the end of it? Nothing. And so the beauty of our systems is, imagine you're a swing trader, and let's say you nailed this thing and you were short up here, and now price is almost back to where it started. Well, that's the holistic advantage of what our system gives you, because you're having the opportunity, as the trade is triggered and the algo fires, you have opportunities to take profits here, 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 all the way down the line. And then, oh, by the way, you got our bull bear pivot, which today on NQ was 87.42. I mean, it doesn't get any better than that. So if you'd like more information, please take an opportunity to visit our website, mercurysignals.com. That's signals with an S. And at the top of the page, if you click on the webinar button, you can register for the next 3 webinars. I believe there's one tomorrow, January 1st, 1 o'clock Eastern time. So if you're a college football fan like I am, put the football on with the sound off in the background, join our free webinar. Look, they don't have the best bowl games on at 1 o'clock anyway. So, but still, you know, you can do both. And as always, we thank you so much for taking the time. We know your time is valuable. We know all the things that everybody has going on. Folks are busier now than ever before. And, you know, if you're going to take 10 minutes, or in this case, 28 minutes to watch a video, we cannot thank you enough. God bless you. God bless your family. We'll see you again soon.